Hey everybody, welcome back. Good to have you here for Swing Trading. My name is Mike Fairborn, Senior Manager of Trading Derivatives at Charles Schwab here. And folks, today, hey, I want to take a look at some of our discussion as on the last week where we looked at some of the downside protection that traders will use on their stock trades. Today I want to incorporate, we're going to still look at some stock trades as well, but also talk about targets, different stop levels or potential exit levels using options and option spread as well with the swing trades. And there are quite a few companies out there, at least it appears, some of those same bull flag type formations that we've been seeing. So interesting to see how those will unfold as we are looking at a traditionally strong part of the year into February. So we'll see how that unfolds, but good to have you all on board. Welcome. And hello to you, Jay Richardson. We've got Paul. Saw Paul in the earlier class, what I was doing chat earlier today. Life in the Fast Lane. We have Rojo. We've got others in here, Chris B. And let's see, who else do we have? Scott. Great to have you guys aboard. Kevin Baker and others. Will, how's it going? Will Riceberg and Cecil. We've got Queen as well. All right, everybody. Hey, any questions, comments you have, throw those in the chat so we can address those for you. I'm joining the chat. Great friend of mine and colleague, Connie Hill. Definitely. Yeah, let us know. By the way, and follow us on X, Connie Hill CS, Mike Fairborn CS. Let's skip on ahead to some disclosures right now because I've got plenty to discuss today. All right, information here. Material is intended for general information purposes only. Now, options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Now, a short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software application for education purposes only. Investing involves risk, including the loss of principal for some products and strategies, a loss of more than your initial investment. Now, there's no guarantee that an execution of a stop order will be at or near the stop price. Okay. And past performance is no guarantee of future results, and dividends are not guaranteed because we do hit dividends every once in a while. A quick look at our futures disclosures. Futures and futures options trading involves substantial risk, but it's not suitable for all investors. We don't really go into futures in this class, but we do look at the charts. And so there you have it right there. Okay, well, let's do this. Let's go ahead and take a quick look at our markets here without going into too many details on them. Let's go ahead and start off with our SPX. In fact, what I'm going to do is I'm going to pull these guys over to the left here. There we go. All right. For now, let's take a look at this. And we had talked a little bit about this last week. We've got a pullback, but oftentimes sending triangles. Yeah, it was a bit of a fake out. Of course, there was some news on this, but we did, bounce back a little bit right there. Let's get a color that we can all see. Black on black normally is a difficult color to see. I mean, it is tricky. That's a little easier, right? There we go. And one other quick note I wanted to highlight here, when you have these longer term lines in place, folks, do this. Take the lines and extend them forward, okay? Some interesting things can happen, not every time, but it does happen from time to time. I'm going to right click. I'm going to activate this drawing. I'm just simply pull it over from where it was right there. I'm going to highlight that, yes, there is a bit of I went off the screen, so it didn't work. Sorry. Let's do that again. Activate it. Pull this guy over. It's interesting. It held up as an interesting level of resistance. Why would we want it to stop right there? Do you see how close we're getting? Sometimes, not every time, but sometimes when you get to that point and you break above, it might actually do one of these. It might give you, of course, a downward move, and it might also give you a break to the upside, a sharper move to the upside. So it's interesting to keep an eye on because it showed maybe some validity on the chart. Some traders would say that. It held up a number of different times. I'm also going to drag the lower one too, because sometimes when these two lines cross right there, it's either going to break out or break down as well. That is the apex of the triangle. So I just wanted to put that on the chart as a reference point for us there. And let's get that all organized back where it was. Okay. So really interesting though, but yeah, somewhat, I mean, kind of falling back into this, heading back into styles here, folks, into this seasonality, traditional seasonality, which is what? Well, it's up through February. And I bring that up because sometimes markets will follow through with that. I made it price percentage wise so you can see it. And we are kind of acting in a seasonal fashion without that blip. But yeah, we tend to go mid-February. Again, if you take out the impact of tariffs and COVID that we had over March, last year it was actually tariffs. Then traditionally, if you take those out, you run up to about mid-March. So we'll see if we get that or if we get another crazy March coming up again. So will be interesting to see on that. Okay. Well, we did have this week a couple of different scenarios. You guys, I don't know if you still had any paper trades on this stock, but we did get taken out today. This was our initial bounce, just to review some that we have out there. This was a bounce that we had. That was our flag pattern, kind of a long consolidation. And we did draw this right off the lows here. So in other words, we took this price, we measured this price to this price because this represents our flag, right? Our flag pattern, which is very common. It's, I would say, a number of traders will consider it, in a lot of ways, they like to see it as a very bullish pattern. So some traders will look at it this way and they'll say, if I get the flag, and you can kind of see how it looks like a flag, sharp move up, mild consolidation, sometimes you get some of these support levels, and look at this. That's the follow through we're looking for, right? Now, within this flag pattern, you guys, check this out. Now, I saw this, and this is one we looked at adding to. We started off with a 50, let's see, 50 shares, and then we added 50 on the breakout. It immediately pulled back down, which is a risk. Okay, but notice over here, shoulder, head, shoulder. Sometimes, not every time, but what we'll do is you'll see this kind of a setup occur on the flag portion of, well, the flag pattern itself, under the, kind of the flag itself. It's not always like this. Sometimes it's like one of these. It might be a triangle. You'll see this is kind of like a pennant pattern. There we go. And sometimes it's just like a bull flat. But that's what it was, and it broke out above that level, hit our target right there, and we're out. But we gained on this one about 15 paper money points. 15 points. It was a little bit higher than that, where it's at right now, but that's basically where the target kicked in gear. It's been sitting out there for a little bit. It hit it. That's a positive. Another one here that we did have, JBL, which has just been kind of sort of meandering around. We only did 25 shares on this one. That's our target up top. You can see our potential exit level at the stop that we mentioned about earlier. The stop right here. Some of the tech has been starting to move, and so we'll see if this kicks in gear. But this is one that's been a little bit slow for sure to kind of move. It kind of dipped back down, but we do have target and stop in place on those stocks. So when we step back and look too, I wanted to show you over here. In fact, let's just highlight this real quick. This is just on my X handle. I found this to be interesting. This is, I will hit this in our markets and sectors class, and it is the sector rotation grid, and it's really brought down to a 1 week time frame. 1 week. In other words, it tells us, hey, what's been outperforming the markets over the past 1 week? Okay, and you can see that, yeah, it was the communication services, very closely linked into technology. I did some looking into technology today, and there are a fair number of bull flags actually out there right now. But folks, this kind of drew me in a little bit because you could see higher highs and higher lows across the board on this. And all we're simply doing is using relative strength against this right there, which is the, well, you know what? I can just click on it, I think. Where are you? Whoops, there we go. Click on it. Yeah. So there you go. So it's no, it's still got the X there. But anyways, it's just the communication services group right there. I'm going to go ahead and just share that with you guys so you have it. But I'll just narrow this down and just highlight over here. If I come over in here and you'll see it, sector rotation weekly, it's helpful for spotting where the strength is. And that's where a lot of those bull flags kick in. Now, you can see actually today we did dip down a little bit. But collectively, it's been really, really strong relative, using the relative strength indicator relative to the S&P 500. Again, I have this mapped out on a week-to-week time frame. I'll put this under the description section for those of you viewing this in the archives. But if you don't have it, I'm going to go ahead and share this right now. It is not a ThinkScript, and ThinkScripts aren't guaranteed for timeliness or accuracy, but it is. These are just charts. But that was the symbol right there. These are all 11 charts. That, if I right-click, well, if I click over here, there it is, communication services. And that was the grid we saw. It did pull back, but it's kind of like a longer-term flag. But we saw a lot of strength in there. Now, today, look at technology. Whoop, there we go. Technology. These are all the technology companies in the S&P 500. Folks, when you see this line going up, this is not necessarily the line of technology. It's up, but it's up even stronger because we're dealing with relative strength to the SPX, right? The relative performance. And so it's quite strong. You can see the S&P is up, but technology really leading the way today. Last week, it was communication services. Here, I'll just share this so you have it right there. Okay. And I did, okay, I just got to double click. There we go. Send it through to the chat. So you can grab that, copy it, go up into setup, open shared item, and then just Control V or, paste it in. Preview, come on down to import, name it what you like though. Name it up here. No, I'm sorry, not there. Just import it. It's going to show up as a grid over here, and it will be the sector rotation grid. Just above this box, right? Just below, I should say, on demand. You click on it, you'd find it down there. Okay, just wanted to show you. That's what's been moving. I wanted to kind of narrow this down to a weekly time frame to really see short-term in a minute way what's really moving as the S&P itself that we just looked at is kind of nearing this area. What's already broken out? Well, technology is doing pretty good. Okay. So with that, let's look at some stocks in technology. And I want to focus in on, first, I wanted to look at using some options on those as well. And so targets and potential exits in the form of a stop, as we'd read, but also ways to do this differently so you guys have it, okay? So here is NVIDIA. Now, not a lot's been said about NVIDIA for a while, but it's been quietly kind of consolidating. What I mean by consolidation, because somebody said, hey, what does that mean? Well, it just means, it could mean going down, it could mean going sideways. Consolidation to me, when I bring it up, is often this range right here in the trend. I think, we're consolidating, we're saying we're pulling back counter to the direction of the underlying trend. So therefore, a consolidation could mean that we could start to go back up. Now, this is looking at it from a bullish perspective. We could look at it from the other side as well, the bearish perspective. But this is the area right there I'm focused in on, right in there. That's what we want to focus in on, is consolidation. And notice we've kept our gains for quite some time, and we did make a new high here. We made this low. These are actually higher lows than here. Higher lows, higher lows, higher lows. And if you look at this, this is perhaps the beginning of the start of another move to the upside. Now, what would clue us in on this? What do you guys see? I mean, first of all, the long-term trends there. But in addition, we're breaking some highs over here too. So we're getting enough strength to maybe break some highs. We're pulling back, and that's kind of like a flag pattern right there. High or low, we're on our way, maybe going up here. Like we said, we've been consolidating for a bit, and sometimes some of the stronger moves, they take some time. That's since actually July of last year, we're dang close. Yeah, July of last year, we're darn near at the same level. Wow, that's a few months. 1, 2, 3, 4, 5, 6, almost half a year going sideways. Could it be gearing up right now? Are we willing to maybe do a short put vertical on this and see what unfolds here? Super, super quick note. You'll notice too, on some of these trends, they might give you, as we've looked at before, and AKAM had the same thing or very similar to it. And that is sometimes you get the smaller trend fitting within the larger trend, and they're both lagging to a degree. That's a very, very small, short-term, flag pullback right there and a bounce. And actually, although it's not a Cahold, it is pulling back like a Cahold right now. Okay, so there's a low, low, low. Actually, there's a new low here, but we did break it. Well, okay, so technically we broke above this high. I guess that's not like a close above the high of the low day. It's a close above the high of the prior low day, but today was a low day as well. So is this kind of gearing up for this? It's been sideways for a while, so sometimes traders might just want to use something like a short put vertical, right, on this, a neutral to bullish. So it can go three directions, really. It can go up, down, or sideways, and traders are looking to collect the full premium on this, right? It can go up over here, break up like a flag pattern. In fact, I'll put a target in there as well. It can go sideways. It can go down a little bit, depending upon where we sell our put. And the put we're selling is going to be the higher one, right? Sell the higher, buy the lower. We want to keep in mind too, this company did get past earnings. So if we're looking to sell a February, look what we've got. Notice over here, we've got some time. Oh, look at that, the 25th. I think the options are expiring right around the 20th or so. Yeah, it's like the 5th day of the, well, I'm sorry, the 4th day, the third Friday of the month. Third Friday of the month. Yeah, we'll look at that though, just to double check. But I think we can get one in before options expiration over here too. So we don't have to be influenced maybe by the movement of earnings. Okay. But it's kind of setting up on maybe a couple of different fronts, and clearly a higher high, higher low here. Maybe the higher low is only confirmed when you break above the high. Okay. I'm going to zoom in though so we can see this a little bit better. All right. So we've got that to look at. So let's do this right now. But we want to also consider targets, not necessarily a target, but how much are we willing to lose or win? I mean, our target, not necessarily a target on the trade, that's more of a stock trade, but really on the upside. In other words, what reduction in the credit, I should say the premium, are we maybe looking for? Traders will look for, oftentimes I've seen 70 to 80 to 90%. I'll just say that. I mean, it's in this range, and kind of in the middle of that is where a lot of traders will use, which is right around 80. Potential exit area for a stop, but how much are they willing to risk as well? Let's start to set this up over here, and I'll show you a few concepts as we look at this. So here is, so February 20th. And the earnings come out on the 23rd, so we can get this before earnings. Let's pull this up right now. In fact, let's get in some more useful information that we have in here. In fact, what? It's not there. Wow. Let's look at our open interest first, and you can see the open interest is very, very good. 5 digits, 4 digits, the thousands and the 10,000 range, very liquid. And you can see for a very expensive stock, relatively speaking, it's actually pretty good. I mean, in terms of, well, there's your 175 at a penny. Pretty good. It can't get any better than that in terms of a spread for this. Now, some of them are, it's like 2 cents, 1 to 2 cents really across the board. Very, very liquid. 110 million shares traded today. That helps. Let's move on over into our Greeks real quick. In fact, before I do that, I'm going to put one of these once and for all. I swore I'd saved one, but I'm going to customize this right here, this set. I'm just going to add in a couple of very important details that I like to look at, and that would be delta and theta. You guys might have some others, but these are really, really useful for potentially selecting strike levels. Again, remember the delta is measured by a $1 move in the underlying stock. So a $1 change in the underlying, the option range will move up or down by the amount of the delta. And you can see in this case, on the put side, of course, that's going to be down. So as the stock price goes higher, the delta would impact it negatively. And that's not the same over here on the calls. We know that calls go up with the stock. Traders will look for that 20 to 40 range. And I'm looking down here and I'm just saying, okay, so here's like our, really kind of 20 to 30 or getting close to it. What do we have? So we've got 175, and we have a lot of, oh my gosh, volume on that today is massive. And so too is the 180. Okay, so we've got these two in here, But what that does over here too is it gives us an expectation that sometimes traders will use. They'll say, hey, this represents a 20%. So only a 20% expectation that the price of the stock may go down below 175 by expiration is how traders will look at this. Now that's just using delta as a guide. Okay, 28% for the 180. So there's the range. There are the ranges right there. So let's do this. Let's go ahead and take a look at our chart real quick. Kind of explore this, and we'll consider putting a trade on now. So there's 180. Yeah, it's right. It's a little bit tighter. Wow, look at the 175. You're below a support level right there. So there, oh, I'm sorry. That's the support level, yes, but there is your short put right there. So you can see, does that give us more flexibility for an upward move? Definitely up, definitely sideways, and even, yes, definitely down. Traders will look for the stock to be closing below that level in order for it to, the trade not to work for them. But basically, if you're holding above there, they'll be looking for it to expire worthless, the short put. Now we are buying a put below here as well, but let's just look at the 75 right now. There's 220, let's see, 245. Yeah, so 245 on the bid. To set this up, let's say if we did a 5 wide, we can look at both. Here's the 2.5 wide is right there. It's a 43-cent credit. If we change that though to a 70, you guys won't see that on your screen. I just flipped it though. It's a 78-cent credit. Okay, by itself, what are we getting over here? So we're getting about $78 dollars. Now, what is that relatively speaking? What are we getting with that per contract? What's our return on risk? Whoa, return on risk is going to be 78 divided by the max loss, 422. About approximately 18.5% we can get on this. Okay. What about if we flip this over and just went with that 72.50? What's our return on risk now? Okay, 43, but look what we've done. We've narrowed this down to 207. So in this class, we're interested also at looking at managing that max loss potential relative to the return. So it is a smaller number here, but how does that compare to our 207? 20, about 21%. So it's very close, 18 to 21% or so. Could we still keep this return a little bit higher? We could, just by going down here and editing and adding in one additional contract. If we're okay with something in the 400 range in terms of total risk, but look what we've done over here now. So now we've increased our credit relative to our max loss. Okay, so still going to be very, very close to that 20% number right here. Okay, so we've got that in place, but sometimes traders are saying, well, there is that impact of time decay. Maybe I'm not trying to get every last penny out of this. And so if I wanted to put an exit on here, there are a couple of ways to do it. And I also want to put a stop level too. So let's work on the exit first. We'll go ahead and put it over here into a first trigger sequence. And I'm going to right click on our row. I'm going to go ahead and just create an opposite order. Okay, so in this case, we're selling. You can see in here, we're basically closing that out. We're buying our short back. I'm still using 2 contracts. There are a couple of different things we can do depending upon how we want to set up that, that exit to the downside if it works against us here. So actually, I'm sorry. We'll be looking at a target. So let's just say we'll get our gain out of this, and that's that 70 to 90%. And there's just a simple way to do this. I'll show you over here. We can shoot for any number we're after, but like say, for example, if I did a 0.43, which is our credit right here, and I multiplied that by, 100 minus 80 or 90. If we did 90, we just go 0.1 times it by 0.1. about 4 to 5 cents. We'd close it at 5 cents. Now, what's interesting about that too is if we tried to get 90% out of it, which is quite a bit. You remember with Thinkorswim, if you close it at 5 cents or less, it doesn't count as a commission charge, right, to get out of it. Now, could that matter? Well, it could. You've got 2 contracts down here, right? So it could cut out the commission if we shot for 90 as opposed to 80. If it was 80, we would just simply do the 0.2, right? We would just do 0.43 times 0.2 to get it 80%. So we're trying to capture that. And so if we can close this for about 8-9 cents or so, 8 to 9 cents, we'd be getting 80% of that amount. And sometimes why this is useful, if we capture that money quickly, we don't have to wait. Sometimes you'll reach that 80-90% very, very fast. And then what happens is you're waiting maybe 2 weeks to get 5 cents. I've had that happen many times. Okay, so what we could do is we could simply just change this over here. Okay, and we can do something like this. We can go down here and just go good tail cancel. I got to lock this in though, so we can get our number in place. It's a 44 now. Okay, but I'm just going to go ahead and put this. We'll shoot for that 90. I'm just going to say 0.05. Okay, so that is actually going to be the level that we've got here in place, okay? And so, but the other side is what are we going to do on the other end, right, as we look at it? So that's really kind of the key area here, our limit down here. So we'll get it at this level or better. But if we're looking for another range, I want to talk about this for a second. We've got in total 44. How much do we want to risk on that 44? I've got a couple of different ideas that I wanted to throw out to you guys. First of all, some people would say if, I'm willing to risk basically it going against me by 50%. And if that's the case, all we need to do, or whatever number you're looking at, we'll use 50% as an example. But in this case, what we want to be doing is setting our stop level to get us out. Okay, this is our limit, GTC set. But if we have a 0.44 that we're getting right there, our credit, we can simply just multiply this by the 1.5. And that's going to give us our number. So let's do that right now. Pull this up. All right, pull this over here. 0.44 times 1.5. It's going to be higher. It's going to be 66 cents. So if it goes against us by 66 cents, up to 60 cents, if it rises that high, we're only willing to go against half of that amount, basically, right? Do you see that? Here's another idea, though. Do you notice down here? Clear this off. We are getting 44 cents. And for a lot of traders, what is the total that they're going to gather here? The total they're going to receive is 44 cents or $44, right, per contract. We got a couple of contracts in here, so 88, whatever. You get the idea. Okay, but that's what we're receiving. Now, when we make on this trade our maximum amount, what are we making? Our reward in this case. Our reward when we're making it is 44 cents per contract. But our risk, if we wanted to make our risk comparable to the best of what we can, right? We talked about, stops. They don't guarantee it at that point, but they do guarantee. I mean, they're looking to get out on an exit, right? But we went through that disclosure. But what if we risked exactly what our reward is? If it's 44, what if we risked 44? You see what I'm saying? So now when we risk, we're trying to get this level, right? This is what our goal is. It's a 1-to-1. It's a 1-to-1 reward to risk ratio if we were to risk that amount. So what does that mean? Well, it would mean that it has to go up by 44. So we would times this by 2, and that's going to be 88. Okay, and that's going to be our stop level down below that we're going to set in place. Okay, so when we win, we get our one. When we lose, we're trying to just get out at one as well. Now, why would this make sense if we're looking at trading as kind of like a business, as a business model or whatever it is? You're saying, well, what's my percent of winning on this too? What's my percent? Well, you're saying, well, what was it? I mean, we looked over here at our delta. In fact, we could pull it up right now. Our delta on the 75 was a 21. So just based on delta alone. So just delta alone. So not looking at anything else, just delta. It's saying our expectation here is about 79% of a win. So if we win, we get our one. If we lose one, but we're using expectations of 79%. Now, could that 79% be higher? It might be higher. What are we looking at? We're looking at a company that's somewhat established. The trend's up. We've got a flag pattern, a potential mini bull flag pattern inside of it. We've got a couple of different things that could highlight this. So you see what I'm getting at? This is approximately 80%, approximately 80%, I should say, over here. So risk reward ratio in terms of wins versus losses on this trade. But if you were setting up a whole series of trades and they had maybe 80%, maybe you're fine with just risking that on a one-to-one basis. Okay. So in other words, we're going to come down here now and we're going to set our stop in place. We're going to go right to our order. We're going to also create an opposite order here. And in this particular one, it's going to be the stop right here. And it's going to be a one-to-one, 0.88 if we can get filled at that level. Now we need to make sure that this is also a good till cancel, very important. You don't want that order falling off, otherwise you wouldn't have anything in place. Right? Right? Okay. So you guys good with this? What are we risking? We're trying to make 90% here, 90. And we're risking on a one-to-one, according to what we, that's what we're trying to do, right? We are using a stop, but that's where we're at. So before I send this through, I'm just going to take a quick peek in the chat and just see where we're at. Okay. Oh yeah, we're buying back on that. Exactly. So I think you got it. Yeah, Paul mentions, I thought the 0.05 only applied to the single leg strategy, and the Connie just says buyback on the short leg. So we're buying that back. But yeah, that's right. It is the short leg. Yes. It's buying it back. Okay, but we did have, at least you're offsetting, one of those there. All right, let's take a look at it. So you're trying to get everything in place here, and let's set this up right now. I don't know, I spent a lot of time talking about it, but there is the order right there. Everything, be sure to check all these out. I can see everything in terms of our buybacks set up the way we want it. So we'll let that sit for a second. There it goes. Okay, nice. All right. So when we go to the chart, we'll see it on the chart too. Our legs will be sitting out here as well. Don't mind. You can close them. You can cancel them by clicking on the X. But there you go. So we've set that up. Okay, very good. Let's continue on. Another one here, SNPS. Sticking with tech. Now, this particular company has, after a dip here, come back. It's made higher highs, higher lows. And you'll notice over here too that we've been kind of resting near some prior highs right over here. It's actually right around 500, a big round number there. The money flow has been really good. I mean, in terms of reaching, surpassing the prior highs over here. Oh, sorry. We're over here right now, and you can see we broke out a little bit higher, but money flow really did take off right over here. And so maybe we saw collective money, according to those that use money flow, so maybe accumulation here of some buying coming in, perhaps, we'll see. But you can see we're kind of going sideways here. Now, we have not really begun to break up higher yet. This is more of a consolidation near 500, a big round number. But let's just do the exact same thing here. When is earnings? So this too is also after the monthly contract. So let's see what we're getting in that delta range that we just looked at before. So here are our deltas in here. So right in this range here, let's see, we've got, here is support at 500. If we come down here, there is additional support right here. And I'm just looking at levels that we can sell below so that if prices dip, they might consolidate at these possible support levels and maybe time, ticks by and it works in our favor here. But here we go. If I go actually below this point here, we're about 465. How does that stand now relative to our expectations in terms of using the delta? Wow, it's really quite low, but there you go, 465. Now the spread here is not anywhere near NVIDIA, but one of the things is it will shoot for the mid price here as we put the price in. So it's going to shoot between these two levels and here as well. So it's about a point in between. So not nearly as good, but let's set it up and just see what it looks like right now. And we can set the whole thing up in as well. So there's the 465, quite a ways down. But I'm going to click on the bid here and then hold the control button down, click on the ask, about $1.25 credit. Now, what does this look like by itself over here? The potential max loss, I should say the max loss potential relative to the reward. So we're going to take 125, we're going to divide that by 375 and just see how these compare. It's about a 33% return. So a little bit better, actually a little bit less, a lower delta too, I should say. So let's set these guys up as well. We'll do another one here. Yeah, create opposite order. Oh, I got to do that only after. Watch this. I'll do it one more time. Create opposite order. We got to go down here, collect first trigger sequence. Okay. Now we can do a couple of opposite orders. Let's do one and let's do two. We'll get these guys set up. We can shoot for something like, let's say, for example, we're looking to seek at least 80% on this one, 80% of that credit. So what I'm going to do is take our gain, I'll lock it in there, and I'm just going to do this. I'm going to say 1.25 times 0.8. So there you go. I'm sorry, my bad. I'm looking over here. It's 0.2. So 25 cents. So just take the inverse of the 80. It's 0.2. There you got it right there. So 25 cents. That's going to be our tail cancel. That's going to be our target. I'll just use that one first. I'll just knock this guy out. Here we go. There we have it. Okay, 0.25. Okay. Okay, now on the exit, if we just multiplied this by 2, if we were willing to basically risk what we could get on a maximum basis, I could do that. If I wanted to risk half that amount, let's do a little variation here on this one. So I'm going to just take this nice and deliberately here. I'm going to take my $1.25 potential max gain, and we're just say if I multiply that times 1.5, so 187 or 188, I'll just go 187 here. 1.87. So if it goes up this high, we could actually get out, if it works against us 50% of that amount, of the total amount here. Okay. Good tail cancel. And yes, that's going to be our stop order right there. All right. So looks pretty good here. It pretty much checks out. But again, we're monitoring this. I'm just going to do a single contract on this one right here. But stop higher, our target, trying to get more out of this at 80% in this case. There's our order dialog box. Let's go ahead and click on, so you can see this, just looking at my numbers here, making sure that these are what I'm buying back. That's what I look at when I go through it and do this. And we'll let this sit and see if we get a fill on this one. Now, some others out there, let me just at least show you some of the others that we could look at. By the way, you can adjust this too, of course, in the monitor tab, adjust the order entry if we wanted to on it. Now, the amounts. Look at this. Some of the other companies, some of the other sectors that were moving a bit. Here is Merck. So Merck has earnings coming up, but Merck has also had a pretty strong trend too. And notice this, it's holding pretty well through here too, at this level. Some traders are looking at healthcare because they think it might be a little bit undervalued right now. An area that could be looked at. These take a little while to put in, so I'm just going to go ahead and show you some others that we could look at. Here is ACN. Let's go 1 year here. I like that. You can see that this is maybe a bit of a possible cup and handle long term, but certainly higher highs and higher lows getting going. Now, would it be a stock trade? We could use smaller amounts. Could it be an option? Of course, under the trade tab, I'm going to look over here and just see the spreads. Does have 2 million shares over here, but open interest, yeah, some of these are okay. You're in the 1,000 range for sure, hundreds as well. All right, let's take a look at Microsoft. Microsoft, okay, a little bit of a bounce. Oh, earnings right there too. So that's tomorrow after hours. All right, yeah, that's one. You could get, yeah, I mean, it's bouncing for sure. It's been down for a little bit. By the way, another Mag 7 that had been bouncing a little bit. Oh, AAPL. There you go. A little bit of a bounce in Apple, which also has earnings in a couple of days. That one there. CAH, potentially getting towards a breakout. You can see earnings coming up fairly soon as well. Here's another one too. I'm going to throw just a bonus one out here. Not tech related at all. Chocolate related though. And that's going to be Hershey Co. Hershey has had a recovery here. The price of cacao or cocoa has been up quite a bit. And I think Hershey's is maybe, I don't know, maybe they're finding a way to take advantage of that. There was 200. It's a big number. We hit it. We pulled off of it, but it was a new high over the last 1 year and a little bit of a support possible. Some traders might be looking for a bounce. So I wanted to throw this out to you guys and see what you thought on these as well. Oh, yeah. So Thea says, yeah, 200-day moving average on ACN. Interesting. ACN, let's pull it up. You guys, if you're getting value from these discussions, definitely one way to do that, just let us know by smashing the like button. It lets me know, my manager know that you're finding this content useful, informative. But let's go ahead and, yeah, we got to show that plot. There we go. Show study. Otherwise, it'll never show up. There you go. Okay, 200-day. Thank you. That's interesting. Yeah, so some traders will look at that too. So it's supported by, so kind of anchored as well by the 200. So you're saying prior support, but also potentially anchored at that point as well. So there you go. Yeah, there are other things. That could be a big one to kind of keep in mind as you guys go through these. Yeah, some people, by the way, I did notice in the chat, yeah, you can look. Paul noticed specifically more than a 10% spread. There's I think you were probably referring to Paul SNPS, and that was definitely there. Those are going to be not as clean as some of the others, but it was a good example to kind of see. You'd have to kind of narrow that down. Are you okay with it? And by the way, when it comes time to close it as well, that can be a little bit more precarious because there's that spread in there, and that can be tricky. So, by the way, folks, we are in the midst of earnings season, so always be mindful of that. I did post over here if you guys want to take a look at it. There are some, yeah, Schwab has a good one with, posted this calendar in here. You guys can take a look at too if you want to take a look at it. But there's just different estimates in here. I noticed there are EPS estimates on. Well, that is what I had for you guys. Yeah, definitely build on this. Take advantage of the tools on the Thinkorswim platform to manage some of those stop levels, those risk levels. Again, I just want to make sure we did confirm this earlier, but we did talk a lot about stops. I just wanted to say too that there's no guarantee the execution of a stop order will be at or near the stop price. We hit it once, but there we go again. All right, everybody. Hey, great to be with you. Thank you so much for your help in the chat. Connie Hill, have a fantastic rest of the day, everybody. Catch you all next time.